Hey everybody, this is John and welcome to the free video. So this is for the weekend, and really the big thing that happened is on the yen futures, they took a whack, unexpected whack, as essentially Japan has come out and said, and other people have said, like, look, your stuff isn't working, you're gonna have to throw even more money at this thing. That weakens the currency, and then that strengthens the dollar short term. And so that put some pressure on gold and put a little pressure on the stock market, although of course a lot of that also was due to Google, Microsoft, Starbucks, etc. And at the end of the day, the central bankers don't want to hurt the stock market. So what'll be interesting next week is kind of a follow-up to see if, first of all, if we continue to get more yen weakness, and if that goes back into, rolls back into stocks going higher, etc., etc. So the unknown with all that is going to be bonds. Now bonds, you can see obviously part of 2016, they've been very, very strong. And then they had a squeeze here, but then over the last couple of days it was sold off. And they pretty much, with the stock market down today, there was no flight to quality in the bonds. So that's, at least in the short term, very bearish for the bonds. And so we want to keep an eye on that. And then as we head into next week right now, just kind of keeping it pretty light for the weekend. I've got Tesla right now. We've got the straddles that you can see that straddles and strangles that expire in 2 weeks. That's, of course, the same week that there's earnings. So I'm anticipating there's going to be a lot of volatility. Right now, it's a scratch trade. So we made a little bit of money today that brought us back to even. Holding the, at the time we put this on, the stock was at 255. So you can see it hasn't moved much since then. But we're not going to get too much in the way of premium decay because the implied volatility will, of course, continue to rally into earnings. So I still like this trade, and it's something we could still do. And then the other one is we have earnings next week on PayPal on the 27th. So on this one, we've been buying out of the money options, so quite a bit of them since it's so cheap. The options are cheap, and then it's about 1,000 shares of stock. So right now we're slightly profitable on the trade. And then the question is, if this stock can really take off into earnings and the implied volatility takes off, then that could be a lot of fun. And then as we head into next week, if we look at our dashboard on the major markets here on the scanner, you can see we've actually got a lot of mixed markets. Now, on a bigger daily picture, Australian dollar is strong, but you can see we've been rolling over on the intraday timeframes. Now, the Canadian dollar is actually holding up really well, largely because the price of oil is holding up. So I'd like to kind of keep an eye on that next week. Crude oil, a little bit of weakness here on the 15-minute chart. We're neutral on the 30-minute chart, but ultimately I'd be looking for a buying opportunity here that gets us in line again with a larger time frame. Euro, of course, weak across the board. S&P 500 very mixed. Gold rolling over here with that weak yen and strong dollar. And then from there, the only things that are consistent across all time frames are the yen. Okay, you got the NASDAQ now, which is neutral here, and then 10-year note and bonds. Now, I like to look at these, even though we're talking in this, we're talking about trading stock options, because these essentially influence the rest of the market. So we could do something directly like, on GLD, do like an option trade on GLD, do an option trade on TLT, right? But that also, kind of lets me know it's like, well, if the overall market is showing signs of weakness, then I can come down here and say, well, look at Apple. I mean, Apple's showing some signs of weakness. CMG is showing some signs of weakness. So why not trade a stock in line with what's happening with the indexes? So that being said, for next week, I want to take a look at Chipotle's for sure. We do have earnings coming up. We can see right now that the at-the-money options, the 442s, are fairly hefty. This is one where definitely there's a lot of negative sentiment on the stock. Sometimes if a stock has extreme sentiment one way, it'll completely do the opposite. But I do anticipate that we'll be able to go probably, 2 times, let's call it $70, right? So if we're at 442, let's even go down to 342. I'm kind of curious, because when everybody's expecting really bad things, wow, look at this. You can go down 2-3 times the expected move, right? 3 times the expected move, and they're 50 by 55 cents. So I think it's going to be it's going to be a premium rich environment for Chipotle next week. That'll be a fun one to trade together. All right. All right, and one last thing I want to tell you guys about is, I mean, as you know, and I think most of you know if you've been with me long enough or if you've been trading for any length of time, is that at the end of the day, if your head is not screwed on straight, you're going to make trading mistakes. And trading mistakes usually don't work out for the benefit of your account. So it's been a little while since we did kind of a refresher course, and this is a free webinar Tuesday, April 26th. And it'll be from 7 to 8 Central. You can sign up right here, your name and your email address. Free webinar called The 7 Inches That Separates Losers from the Winners. So here's some of the things that we're going to cover. Especially newbie traders. Why total newbie traders have a massive advantage over grizzled veterans. Okay, when they learn this one simple yet critical mindset hack. How to avoid the hidden mental trap that seduces you into buying tops and selling bottoms, and what to do instead to trade strategically. You know, if you've ever just felt like you're always fighting the market, fighting, well, there's a little mind shift that you need to switch on that, because it's by nature that's what we want to do in trading. How to erase the seemingly innocent habits that sabotage your trades and always lead to painful losses. The essential attitude tweak that can stack the odds of success in your favor. And there's a couple of other things here too. I mean, I want to talk about one habit specifically that separates the top 10% of traders who consistently make money, how to break through stubborn profit plateaus. Okay, this is something I've had to work with a lot. And then how even beginners with small accounts can avoid needless losses and be positioned to enjoy extraordinary gains. And a big part of this is, for the lack of a better term, it's mind hacks. And, you know, of course, I've been doing this for a long time. I've made every mental mistake in the book. But I've also, through my journey, I've had an opportunity before Mark Douglas passed away. We were working together like right up to 3 weeks before his death. And I just want to share the stuff that I learned during that time too. And I think the whole trading journey simply is a journey about becoming better and more accountable and more mindful of yourself as you're in the moment, as you're placing trades. And the more you can be like that, the easier this is. And it's just understanding A, what that looks like, and B, how to get there, and how does that impact trading, and what's the difference between trying to be mindful as a trader versus being mindful as, like, say, a yogi, right? Because trading can be a highly stressful endeavor. And then increasing your fortitude so you can do that with consistently bigger and bigger size and you don't freak out. Anyway, it'll be a fun webinar. The short link for that, you just go to simplertrading.com/mind. Simplertrading.com/mind, and looking forward to seeing you there. You guys have a great weekend.